Today, we're going to crack open the books on Microsoft's latest absolutely massive quarter. We're going to zero in on just the CFO's opening remarks, because that's where you find the real story about the financial engine funding this huge AI push. So, let's dive in.
Let's just start with a number that, honestly, it just jumps right off the page, 112%. That's the year-over-year growth in what's called commercial bookings. Basically, the value of all the new contracts Microsoft signed. It's a staggering figure, and it tells you demand is just through the roof.
So a number like that, you gotta ask, right? What in the world is fueling this kind of momentum? Let's break down where all that growth is coming from.
To really get it, we first need to just look at the big picture. And the story, as the CFO laid it out, was simple. This was a blockbuster first quarter that pretty much blew past everyone's expectations.
And here's how CFO Amy Hood put it herself. She said, "We delivered a strong start to our fiscal year, exceeding expectations across revenue, operating income, and earnings per share." You know, that's a really clear, confident statement that sets the tone. This wasn't just a good quarter. It was truly an exceptional one.
Okay, this is where it gets really interesting. Let's dig into the core numbers to see exactly how they crush those expectations. Let's break it down. First up, the top-line revenue. It hit an enormous $77.7 billion. That's an 18% jump from last year. I mean, for a company this big, that is just a massive leap.
But here's where it gets even better. Operating income, a key measure of how profitable the business is, grew even faster at 24%. So what does that mean? It means they're not just selling more, they're getting more efficient and more profitable as they grow. And all that strength flowed right down to the bottom line. Earnings per share, which is the number investors really watch, shot up 23%. So you see, top line, operating income, bottom line. Just incredible, powerful growth at every single level.
All right, so we've seen the big numbers. But where is all this money actually coming from? Microsoft has three main parts to its business, so let's see how each one did.
This chart gives you a really nice snapshot. You've got productivity and business processes. That's all your Office 365 and Dynamics stuff. Then there's the massive intelligent cloud segment, and that's where Azure lives. And finally, more personal computing, which covers Windows and Xbox. And you can see right away, both productivity and the cloud are just absolute behemoths. But you know, revenue size is only half the story. Now check this out, because this is the really interesting part. Look at the growth rate. While everything grew, Intelligent Cloud is just in a totally different league, rocketing up 28%. And the rocket fuel inside that, Azure, which grew a mind-blowing 40% all on its own. I mean, right there, that is the entire AI story in a single bar chart. And look, that 40% Azure growth, that doesn't just happen by accident. It's the direct result of them spending an absolute fortune to build out the infrastructure that the AI revolution needs.
Which, of course, brings up the big question. How on earth are they paying for all this? How are they building what they're literally calling their AI factory at this unbelievable speed?
Well, here's your answer. In one jaw-dropping number, $34.9 billion. And let's be super clear, this isn't revenue. This is their capital expenditure, or CAPEX. This is the cash they are spending in a single quarter to build data centers, buy servers, and lay that foundation for future growth.
And get this, here's a really fascinating little detail from the CFO. About half of that enormous number, around $17 billion, went to what they call short-lived assets. Now, what's that in plain English? It's the workhorses of AI. Thousands upon thousands of powerful GPUs and CPUs. They are literally spending billions on the raw computing power needed for the future.
Okay, so they're spending money at a pace we've never really seen before. But you have to ask the question every analyst is asking. Is this smart? How do they know for sure that the demand will be there to justify this kind of investment? Are they getting ahead of themselves?
Well, this is their answer. $392 billion. This is what's known as their remaining performance obligation, or RPO.
So what in the world is RPO? Well, here's the most important thing to understand. It's not a guess. It's not a forecast. It's the total value of contracts that customers have already signed for services they haven't gotten yet. You can think of it as a giant, guaranteed order book. So they aren't just building this stuff and hoping people will buy it. They're building to fulfill almost $400 billion in orders they already have.
Okay, so we've seen a monster quarter, and we've seen a massive backlog of orders waiting. That really sets the stage for what's coming next, right? So let's take a look at their official guidance for the upcoming quarter.
Looking ahead, it looks like the momentum is not slowing down one bit. This table kind of lays out their forecast, and you can see the story just keeps going. Intelligent Cloud is expected to lead the pack again, with growth projected up to a crazy 27%.
And when you dig into the fine print of that forecast, a few things really pop. First, they think Azure will grow around 37%. Second, that huge CapEx spending we talked about, yeah, that's going to go up even more. And third, and this is so important, they expect to remain capacity constrained. What does that mean? It means demand is so high, they literally can't build fast enough to keep up.
And that really brings us to the final critical question, doesn't it? The orders are in, the money is committed, but can Microsoft physically build its AI factory fast enough to meet this historic wave of demand? The race is no longer just about having the best AI. It's about having the infrastructure to deliver it. And that is the multi-billion-dollar challenge they are facing right now.